Hello and welcome. You're watching Closing Trades on ET Now. I am Snehi Shah and last 1.5 hours left of trade. Let's take a look at what's happening with the market right now. You have a little bit of a selling pressure that's being seen on the Nifty right now. 0.3% lower for the Nifty. 25,900 is where we are at. So 100 points away from that 26,000 mark that we'd actually really like to see. But other than that, it's been an earnings heavy day. We've had so many earnings. Bata in focus on the back of weaker than expected numbers. TTK Prestige on the other side, such a sharp run up on that stock on the back of brilliant set of numbers coming in. While we are talking about numbers, yes, see 11.5% uptick on TTK Prestige, very healthy move on that front as well. But while we are talking about earnings, let's interact with the management of NIIT Limited. We have Mr. Vijay Thadani, the Vice Chairman and Managing Director, joining us on the show. And if you take a look at their numbers, the revenue is up about 25% on a sequential basis. EBIT loss at 8 crore compared to a loss of 17 crores, and net profit at 1 crore compared to 4 crores. There's a little bit of a blip on that front. Mr. Thadani, good afternoon and thank you so much for your time today. Let's talk about your financials. Let's throw some light on the kind of numbers that you've reported. A little pressure on the bottom line this time around, even though the top line has seen some healthy growth. Your take on the Q2 numbers and what is the outlook on profitability going ahead?
All right. So I think it's been a very good quarter from the way we had forecasted and the way we had projected. We are actually on the upper end of the guidance that we had given. We had a revenue of 104.9 crores, 16% growth YOY and 25% QoQ. This is in contrast to a place where we were in Q1, where we had the orders, but we couldn't execute them. This time we got a chance to execute those orders, but more interestingly, we added many more orders. So we had a very decent order intake, 145.4 crores. And we were able to keep the EBITDA, despite our guidance of being slightly negative EBITDA, given the fact that the company is in an investment cycle. I think we were able to show some positive EBITDA because of good pricing and most importantly, through our AI first strategy. It is the AI first strategy which got us 18 new logos, which added momentum to our order intake, very good growth in technology sector, given the strong need for upskilling and reskilling which is coming up, as well as new set of skills which the early career students need. So as you can see, we had growth both in enterprise as well as in consumer segment. On the other hand, on the BFSI, there was still a cautious statement to make because the hiring has been quite restricted for a number of reasons. On the other hand, India enterprise is very, very bullish. So if I covered sectors, technology and India enterprise really firing very well. BFSI in very good shape. We are market leaders, but at this time, the demand from their side is muted. We are in an investment cycle. We invested very heavily in AI. We invested in an inorganic entity called IMNEO, which incidentally has done exceedingly well, much ahead of their projections in the first quarter with us, as well as very good profitability. So despite the investment cycle, I think we were able to show a positive profitability, or was a positive scene. And I think the strong order book puts us in a strong shape for the rest of the year. That's how I would like to summarize. And I think AI first strategy is working out very well.
Mr. Thadani, let me take a step back. Hi, this is Harsh. I want to first understand what your book-to-bill currently stands at, because that will also, to some extent, drive execution. You spoke about the strong growth that you've seen in Q2 as a result of the kind of book-to-bill that you were sitting on and slower execution in Q1. Talk to us about how that is panning out in terms of how the book-to-bill is shaping up and how much traction are you seeing on the order book side of things. Give us that sense.
Yeah. So a good question, very good question actually. Our book-to-bill moved from 1.25 to 1.4. So that's a very positive statement. The second is we have a strong pipeline, so that's helping us a lot. And I think our AI first strategy and our very unique position, especially of using AI for learning and development, is putting us in a very strong competitive position. We added 18 new logos from a corporate side. And of course, our new acquisition, IMNEO, has done very well. It's getting very good acceptance from universities who would like to introduce the IMNEO AI-powered SaaS platform as a part of their curriculum. And that's, by the way, an annuity-based revenue. So that helps us a lot in building a strong position. If you were to look at the book and bill and the strength of the orders that we have, we closed the quarter two on a much higher order book than we closed quarter one. So to that extent, I think that additional momentum will also help us in going forward.
Okay, and Mr. Thadani, lastly, before we let you go, you had guided for a 25% growth. Your revenue growth has come just about that. What is your target for the revenue growth for the remaining quarters, the overall financial year? If you could share some outlook for FY27 as well, and similarly for margins as well.
Okay, so first let me correct. We had guided for 13 to 16% growth in this quarter on a YOY basis. We have had 16%, which is what I meant when I said upper end of our guidance. The second is for the year, our guidance was 15 to 20%, and I think we will stay committed to that guidance, given despite the fact that there is a lot of volatility, but the strength of our order book, our pipeline, and the strength of the products and offerings that we are going with in the market and their acceptance, I think our confidence remains in holding on to that 15 to 20% guidance.
Okay, thank you, Mr. Thadani. We'll let you go on that note. Thanks so much for joining us. And apologies once again to keep you waiting between the two shows. Thanks for coming in and speaking with us.
No, as long